Hey, how you guys doing? Have you ever wondered when to pay down points and when not to pay down points when purchasing or refinancing a mortgage? That is what we're going to dive into today.
Chris, thank you so much for your...
Chris, thank you so much.
Chris, thank you.
Thank you.
Chris,
The mortgage server.
Biggest questions I get is, Chris, where are interest rates? And what is the lowest rate I can get? This is a very common question. To answer this question, we need to know what interest rates are and what points are. Interest rates represent the cost of borrowing money at a particular percentage based on the loan amount. So for example, if your percentage is 6.5% based on 400,000, that 6.5% is the cost of borrowing money based on that $400,000. I won't get into the weeds in this video, but to explain it briefly, mortgage rates are influenced by the federal funds rate plus many economic factors within the economy. Let's say you want to buy a $400,000 home at 0% down for easy numbers. And let's assume the lender tells you the market rate is at 6.5% for easy numbers. Let's assume that principal and interest mortgage payment is $2,528 a month. Let's also assume that closing costs come to $6,000, factoring in typically, a lender tells you where the market is without buying down or paying points to get that rate, provided you're the ideal borrower with credit and equity in the property, etc. You may ask, what's the lowest rate I can get? A lender may say, well, the lowest rate you can get is 5.875%, for example. Guys, these are not actual interest rates. I'm just using these for an example. The same $400,000 loan amount would drop your principal and interest payment down to $2,366 a month. This would be a monthly savings of $162 a month. That would be great. But now, instead of your closing costs being $6,000, your closing costs are $8,500. This would be the cost to buy your rate down $2,500. Then the bottom line question is it worth it? I will tell you, it depends. It depends on what your overall goals are. How long do you plan on living in this property? I will tell you, if you don't plan on living in this property at least 7 years, typically it's not worth paying points down. There are better ways and places for you to put your money. If you do plan on staying on the property at least 7 years, here's the math you want to do. How long will it take you to recoup $2,500? Your savings is $162 a month, and your extra closing cost expense is $2,500. So if you divide $2,500 by 162, that equals 10.4 months. So it would take you 1 year and 3 months to recoup that $2,500. If that is worth it to you, it makes your decision easy. I really hope you enjoyed this and it sheds some light on interest rates and points.
Thank you so much.
Chris, thank you.
Thank you.
Chris,
The mortgage server.